Ethereum price weakens post-merge and Shiba Inu's overdependence on the burn mechanism. Hey, what's going on, everybody? Welcome back to the channel. Glad to have you guys here today. Today, we have an incredible video for you. We've got really two great articles talking about Ethereum and how it has flopped with this whole merge. Everyone was all hype. The news hits and boom, the crash happens. And that is why they do say you always want to buy the hype and sell the news. And obviously that is playing out in the charts today. We are going to take a deep dive into the Ethereum charts and look at that for sure. Also, Shiba Inu's overdependence on the burn mechanism. Is the price and the rally and the excitement and the hype behind Shiba Inu, is it too premature? Is it all based on this burn and that's all that's there? We're going to dive into that article today as well. And hey, if you're new here, my name is Ryan Huggins. I'm a real estate agent here in Orange County, California. And I'm also a crypto and real estate investor. And my job is to help be your crypto shortcut, because if you're like most people, you probably don't have the opportunity to spend hours a day reading through articles, following the charts all day, checking YouTube videos and dissecting that information. But that is what I do. That's my job. And then I bring that information to you here on this channel. So if you're looking for a crypto shortcut, smash that subscribe button. We'd be glad to have you. And also, if this video gets 5,000 likes on this video, I'm going to throw an extra $100 to one of you lucky comments down below. So here we are on the daily charts, or actually, sorry, we jumped to the weekly charts for this part where we're starting off today. This is on Shiba Inu. And as you can see, we actually have here, what we're going to do, actually, we're going to erase all of the charts. We got a lot of drawings going on there. And for those of you that have not been following along, you might get lost. So we're going to start right here with the brand new chart so we can figure out what the heck is going on with Shiba Inu. So right now, first and foremost, let's look at what the sentiment is like on Shiba Inu on the weekly chart. So we check down here with our RSI. You can see a couple of things here. You can see the volume is tightening. So you can see these right here, the volatility bands, they were really spread out up in this area. They started kind of curving inward right here on the charts, which you can see. So now what we're left with is a tightening volatility band. So very much closer as far as that goes. This orange line right here, that is your market baseline. That's like the average. So it's kind of like a moving average for the RSI. And you can see it is currently sitting above the market baseline. So that is our first and foremost positive sign that we have in the charts for Shiba Inu right now. Positive sign number two is that we are starting to slope up. And remember, this is on the weekly charts. It's much larger than the daily charts, which we'll drop down to in a second. But it's not fully tilted to the upside. It's more trading sideways, right? And you can see that reflected in the price as well. Now, the other thing that is bearish for us right now is that we are below the 50 level on the RSI. So that gives us a bearish sentiment as far as the RSI goes. You want to be above 50. When you're above 50, the bulls are in control. When you're below 50, the bears are in control. And remember, this is on the weekly chart. So this is a much larger, long-term looking vision. Okay. So the other thing that we're going to do is we're going to take a look at our supply and demand zones. So with our supply and demand zones, we take our box tool here, and we are currently on the Heikinashi candles. This is the easiest, most effective way that I have found to find it. You're going to go to the last candle before it changes colors. All right. So for this, we're in a down. These are all red. This is the last red candle before we get a green one. So we box that candle off. Now, for those of you that are watching and you already know this, we use white for our weekly boxes. Okay. And you can see right now, Shiba Inu is coming down to tap right on our weekly supply and demand chart. So that we're looking at a potential support here coming in very closely. All right. Now, the next thing we're going to do is, okay, so if that's our downside support, our first level support, obviously the bottom of the box would be the second level. That's quad 0, 1, 1, 1, 0. All right. So quad 0, 1, 1, 1, 0 is our support right now that we could potentially see a bounce off of on this longer term chart, more of a swing trade type of chart here. Now, also, I am not a financial advisor. None of this information is to be taken as financial advice. Do not buy or sell anything just because we talk about on this channel. This is just financial education, and we're trying to cover what is happening in the markets. You guys can all be doing this as well. We're using TradingView. It is a free website. You can go get one of these charts and learn how to start charting as well. The next thing we're gonna do is we're gonna check our top side. So this one is our last green candle before that down move. So now you can see we've got our last green candle before the reds and our last red candle before the greens. All right, so that's what we've got, our big time frames. That's our kind of, if you were to be charting this, the support and resistance level on a large scale time frame. And we'll drop down to some smaller box stuff here in just a minute. The next thing that I have found that ended up working tremendously well, if you take your Fibonacci from the most lowest point on the section that you are charting out, and you go up to the first resistance level of that upside weekly chart, you're going to find some really interesting key levels. These are kind of predictive levels, right? Because these haven't even happened yet. Most people will take their Fibonacci and draw it to where it already has been, right? So this is the swing low to the swing high. The interesting thing is these also play out. You can see it's tapping on a 618. But I'm thinking forward. I'm thinking, okay, well, where could this be going if the bullish momentum steps back in? And so you go up here to where it'd be potentially running into a resistance. And that's where we've got this. Okay, so that's our weekly supply and demand zones. And we've got our Fibonacci drawn. And you can see where the RSI is. So right now, if we're looking at this, a couple of things. One, the green background on the TDI indicator, that is a little bit of a bullish indication. However, we're below the 50, but we're above the market baseline, so that's positive, okay? The negative thing is that right now, we are below the 50, which is unfortunate. And if we also turn on let's do our moving averages here as well. So here we have our moving averages. And as you can see here, we are below the 21 exponential week moving average. The 50-week moving average is still on its way up. And look where that corresponds, by the way, as far as that top side of this Fibonacci level that we just drew. Okay, so now the next thing we're going to do is drop down to a smaller time frame. So here we are now on the daily time frame. You can see here the RSI. It was working its way up. It did get above the 50 level, and unfortunately, it rejected off the market baseline at the RSI, which was also itself rejecting off of our Fibonacci, the future fib right here at the 618 level. It rejected multiple times. Now we can switch to the Japanese candlesticks, by the way, and it'll give us a little bit better of an idea. Also, as we see here on this indicator that we use, the market cipher A, Shiba Inu, it did give us a big, giant, fat red blood diamond. Blood diamonds are not good. And as you can see, since the blood diamond came, we dropped below the 21 exponential, below the 50. Now we're on the daily charts, and we are still continuing down. 21 is sloping down. The 50 moving average starting to slope down as well. We are headed back down, very likely to the bottom of our volatility bands here, and very possibly headed back down to the daily oversold territory here at 30. And what's interesting, which we talk about a lot here, price usually runs up to the 70, and then that's going to be peaking out, right? So look what happened here. Boom, price ran up to that 70, actually got all the way up to 76, 77, rejected from there, the overbought territory, and now it's just creeping its way down to potentially the oversold territory. So we're going to keep a very close eye on what's going on there. All right, and then one last check before we'll do some smaller time frame supply and demands. We'll go to our 4-hour time frame here. And as you can see on our 4-hour time frame, this is interesting, right? We have a bullish divergence on our 4-hour time frame, but look at what's happening to price. Even after the bullish divergence, we're still getting crushed by the bears to the downside. You can see our 21 exponential moving average sloping down extremely hard, 50 average sloping down as well. We currently have 1, 2, 3 yellow X's. Those are manipulation indicators. Typically, there's a 4th yellow X. 4 yellow X's means that the manipulation is over, and then we could see a potential move to the upside. But that's where we're sitting on that right now. So let's go back to the Heikin-Ashi candles, go back to daily, and let's get rid of our Fibonacci. We don't need that anymore. And let's also get rid of our weekly supply and demand box. So I hope you had that. Remember, that was quad 0, 1110. All right, that was the level there. In fact, let's go ahead and draw a line here for us, and then we'll mark that at quad 0, 1, 2, 3, 4, 1, 1, 1, 0. Okay. All right. So there is our support level. And as you can see on the daily, it's getting really, really close. All right. So the next thing we're going to do now, we're going to go ahead and turn off the moving averages. So we have a clean chart again. So we currently know we're going to be doing the same exact thing that we did on the weekly, but now with the daily, but you see there's a lot more chop in there, right? So as you can see, the price has dropped below these red candles, red candles, red candles. So we're actually into this red candle. That would be our most recent possible support level. So we go here and here, and this is going to be red because we're using that just to distinguish for you guys out there. Oh, this is daily, sorry. We're using yellow on dailies. And this will help you decipher, okay, well, what level is that? So as you saw earlier, the whites would be the weekly. This one here is the daily. And now if we take a look at the Japanese candlesticks, you can see where price came in the past. This is where it started as a support and resistance. It tapped, took off, came here. It's getting close. It actually got into it, rejected off. So that's really good. It did not even get all the way into the quad 01110 support level yet. So that is positive. Now, the other thing that we look at is we look at these two extremely tall candles because we're going to be looking for the upside here. And for those of you guys that have been around for a little while, remember, this is our target to the upside. It's not even a target. It's just more of the resistance level that has been a historical extreme resistance. And we talked about it literally the day before it broke. We've talked about it for weeks. The day before it broke, we said, if it breaks this quad 0130, it is likely to see a big pump. Now, I didn't think it was going to be as extreme of a pump, but boy, oh boy, it did not disappoint. So what goes up fast usually comes down fast, and it sure enough did. Came back to that quad 013 level and tried to hold it as a support. And unfortunately, the bears just keep kicking it in the face and moving it to the downside. So now we are here at this daily supply and demand level. Let's jump to the 4 hour and see if there is a great spot. Are we holding a really, really, really awesome spot, or is it likely that we could see a continued drop here? So what we do is we go back in time and we look at, okay, so we know price is currently sitting at this box right now. You can see the dotted lines here. And if it doesn't hold here, obviously we know we have the daily box, but look at this though. There is a potential of a pretty gnarly drop down to the bottom of this box because that's the 4 hour supply and demand candle. So if we lose structure here and we do get down below this quad 01110 level, the reality of it returning lower and all the way down to quad 01050 is definitely a realistic spot. If it continues its drop, and right now we're just covering the down because obviously we're in a current down trend. So let's see here, horizontal ray. We are, our spot here is lower than here, so we're not going to mark that, not going to mark that. This one we could mark because that's lower, and we can mark this one as well. Okay. And then, of course, that should not drop that far, that fast over the next day. So we'll leave those marks for now to the downside. And then what we'll do is we'll cover tomorrow if it continues moving its way down to where it could be going. Because remember, ultimately, there is still the very likelihood of a new lower low. Because if you guys remember, so we have this here. Where's that wick? There we go. All right, so this is the last candle, but this was that ultimate low. So I'm going to mark all of that. And then that one is going to be dropping below quad or 50714. There is the likelihood of that before our next major run. Okay. So, you know, I'm still very bullish, very optimistic on the crypto market as a whole. However, there is a possibility that we have a continued and hardcore drop towards the end of September, and then really start making a nice move up in November. So we're going to watch for that, and we're just keeping ourselves very in tune. We're watching the markets every single day. So make sure you tune in here every single day so you don't miss out on what we're covering. So that's to the downside. Now let's look at some positive news. What could be happening for Shiba Inu to the upside? Let's look at the daily, because right now, in reality, there's just too much chop. Like there's so much interference here on the 4 hours that it's going to take some massive volume to get up to the upside. So here's our daily move to the upside, where we would really like to see ourselves go, and breaking above this, obviously. So right now, that quad 013, I just want to reclaim quad 013 as a support. That would make me feel better, because at that level, because it was such a resistance for so much time, if we can claim it and actually own that level, we have real likelihood of moving to the upside. All right. After that, our next move to the upside is here. And then, what's great about this one is the bottom of this supply and demand candle lines up exactly with the quad 013 level. So we'll get rid of this one. So if we can get into here, claim support, get out of this box, then we'll be moving to here. And then what we're really looking for after all of that, there's going to be some interference climbing there. Obviously, our next level that we really need to break is the tip of that candle. Quad 018. Quad 018, we start moving up, make this rebound, break above quad 018. There's a real likelihood we can make it up into our weekly target that we've been talking about. Now, what's also really interesting, if we go ahead and look here at this ultimate bottom we just had, and we move this up to the resistance line of that weekly candle, look at how perfect it hits the Fibonacci right here, the 382 level. It gets up there, rejected, and that's when we started dropping. It also had a little stop here briefly on this 0.50 Fibonacci. That's why I'm really excited about this potential run to the upside. We know where our levels are going to land when it does start climbing the ladder. Conversely, if we just continue the drop, we'll just have to reevaluate once the drop is finished. Let's go look at Ethereum. All right, so Ethereum, we did a lot of work on Ethereum yesterday as well. And we're going to get into those two articles, by the way, how Ethereum is flopping post-merge. It was supposed to be the biggest pump ever. People were going to become billionaires from Ethereum. Unfortunately, it's had a little bit of a stall out. It's flopping a little bit right now. We're going to cover that article. Also, the burning issue with Shiba Inu. We continue to burn and burn and burn, but the volume of actual coin buying is not happening. So we're going to look at that article right after we go over this, and then we'll tap on Bitcoin here in a moment. So let's go ahead and clear all these drawings as well. We'll start here with a clean chart. Let's do the weekly first and take a look at what is going on here. So first and foremost, let's get our box here. Let's draw it on this candle because that's our last green candle before the down move. We color it white. And then we're going to go ahead and do the downside as well, which is this one here, and boom. All right, so now we have our weeklies drawn out. Let's go ahead and take our Fibonacci, go from the most recent low up to the top of this potential resistance of our weekly supply and demand box, and look at how the fibs play out perfectly here. So it's kind of predicting the future of where price will go. And as we can see right now, price did move up, rejected off the 50 line, came down, tried to hold support on the 618 for a second there, and now we're settled here on the 70 line. So let's drop to the daily. We'll take a look here. And as you can see, again, price came up to the 70, would not break it, finally did, went to the next level here, and that was the 618, finally broke it up to the 50, and that's when it just said, no way, Jose, boom, back down to the 70, dropping down. We're not even quite to the 786 yet, so the likelihood of it coming to this level here of the 1364 is pretty realistic. So let's look at the Japanese candlesticks, how this plays out. It's very, very close. It has not tapped it yet. It has tapped it in the past, as you can see here. So we're just going to keep watching that on the daily charts. But let's do daily supply and demand now. So if we take a look at our daily supply and demand, we can go back in history, and we'll look at this one here since that's where price is playing at right now. And we'll use this candle. We're going to color it red. Boom. All right. And again, what I'm doing is I'm just boxing off the whole candle, the top if there's a wick, the bottom if there's a wick, And then I'm using the box tool. And then right now I've got it set in the settings to extend under style, extend right. That way it just automatically makes the entire supply and demand field for me. So as you can see, we're in the middle of it. We're in the middle of it. So there's probably a deeper, oh, that's the daily. There's probably a deeper look. So let's go 4 hour and see what's going on from the origin of this level, which we got it from this drop. On the daily, it was different. So what we're going to do is delete that. This is our candle in question. So let's go here and there. All right. So now we have that 4 hour candle, which is right where price is just hovering above. And that's where price is more than likely about to come now. Well, as you can see, the last 4 hour candle actually wicked it exactly. So you can see how precise these supply and demand zones are for you. It came just exactly. Now, that doesn't mean it's going to start piling to the upside. We look here on the 4 hour charts. We are seeing that the market baseline is sloping down. We are having continued drops in the RSI. We're below the 30 level, so we are deeply oversold on the 4 hour. It's trying to make its way back up to the upside. Ethereum is currently at $1,440, and it is down 2.2% on the day. We do have 1 hour and 30 minutes left on this daily candle. So the next thing is, all right, well, if that's the case, where could it be going after that? Since we know that that is definitely a reality of where price is going, and it already tapped it, it could obviously continue dropping lower. The next lowest level would be here. And you can see at that 786, right? And you can also see right here, this candle was the candle that tapped at 786. And then after that level, we do have another drop here. And then after that level, we have another drop here. And then ultimately, we have our weekly drop here. All right. So that's what we're looking at as far as those goes. And there's even lower, but for right now, as far as time and movements go, I can't say it won't, but again, it's not financial advice anyway. But as you see, a 20-30% drop overnight is probably not happening. So I don't have to keep on going. We're just going to use those levels as they come at us in the future. So let's remove the weekly level now so it's not confusing. I would like to change this color just because we'll make it orange so it stands out a little different. Okay, those are both 4 hours, but we know that it came and tapped that one already. Is it going to work its way down? Okay, now let's talk about, well, what if we start to build some momentum to the upside? So let's get rid of our weekly candle to our weekly box to the upside. This is our next supply and demand zone here. And that one's going to be on the 4 hour. So it's red. So now we have our target potential to the upside, like what the supply and demand target is what it's showing here, not anything. Don't be trading anything. And if you were doing any sort of trading, I'm expecting that if you're listening to this, you're using paper trading, not real money. You're just having fun in the markets. So right now, the bottom of that level is 1,574. After that, it would need to break to the upside of 1,654. And then let's see if we can get one a little higher. So there's going to be an interference zone here, but let's get the peak of this level right here. This was our peak. Price could be coming back to trying to take that peak back again. And then that peak of price is that candle 1756, the bottom side, and 1790 is the top side of that candle. So that's kind of our ultimate view of what supply and demand looks like. We know our prices are up here in the 1750 range. It has to battle back here to 1575 and take that as ownership and claim that before it can move. However, also to the downside, if this level that it's at right now, it's already tapped it, this last 4 hour candle, the 1400 level breaks, then it'll be making its way down to the 1350. If this ultimately breaks the orange level too of 1335, then it could have a free fall here to 1220. So that's Ethereum. Let's go look at Bitcoin. Bitcoin USD. All right, so Bitcoin we already have drawn out, so we're just going to leave it. So we do have our levels here drawn out, and this 4 hour level that it's sitting in, we actually went all the way back in time and got this one July 13th because it's been such a strong support over time before it broke. Now it's acting as a support again. That previous 4 hour candle is our candle. The same thing with Ethereum. It had that really gnarly drip, that hard drop right there. Unfortunately, with that, it did also break this trend line here. So let's go to the daily and we'll do Japanese candlesticks. And so as you can see, the bottom here, let's change this. So let's just say that our trend line didn't break. So that would be positive, right? So our move to the next level upside is currently on its way to 20,411 if we're going up. And then it goes up to this level here, which is 21,134 supply and demand. That's upside. Then we're going to run into interference before it gets to this level, which is one of our really, really strong supply and demand levels that we need to break. And that's that 21,925. Okay. So that's up. If, however, volume continues to plow to the downside, then we would break this trend that we just moved the candle. But if we break this trend and we continue dropping, you're looking at potentially coming to 18,968. We can see our RSI right now on the daily. It's getting to the market baseline. It's either going to cross here as a bearish indicator or it'll start to bounce. Let's look here on the 4 hour. 4 hours sideways. Look at 4 hours starting to climb a little while the price is descending. We could see a bullish divergence appearing. Look at this bullish divergence, price still traded sideways and down. So the RSI is climbing. We can see that on all the different time frames. It's trying to move up, but the price just isn't going. So maybe we are compressing that spring right now to where we could have a nice explosion back up to the upside. As we've talked about, this 4 hour imbalance right here or fair value gap still needs to be filled. That is a really, really strong fair value gap. It's been sitting here for a long time now. You can see this was the September 13th, so 2 days ago. As we talked about the fair value gaps, all of these, when that big, huge 10% move happened, those ended up getting filled to the downside, but there's still one now to the upside. And the markets don't like open fair value gaps. All right, so we are just waiting to see, is price going to start moving to the upside? We have the weekend coming. All right, so the weekend is here. We have 1 hour and 22 minutes left until Saturday begins. Then our weekly candle will be coming to a close, and the weekly candle will be coming to a close in 2 days and 2 hours. We've had a very, very significantly strong bearish candle. It had a move up, then this crazy, crazy move down. Bullish engulfing on the weekly, very negative all the way around. And let's go back and recap the Ether weekly candle here. Also bearish engulfing. However, it did stop right here. So these previous weekly candles, it rejected. It's moving up there. So hopefully that's a good sign. Shiba Inu weekly candle also extremely bearish. Shiba Inu's overdependence on SHIB burn has led SHIB down this road. Meme coin Shiba Inu SHIB recently registered a decline in its price. Though the developers are leaving no stone unturned to burn large amounts of tokens daily, their efforts are not reflecting on SHIB's charts. Furthermore, SHIB burn just recently announced they plan to launch a new iOS, Android, and Alexa skill for SHIB burn radio application. So it just says here, we just submitted the Alexa skill for SHIB burn radio. In a few hours, we will submit the station's app for iOS and Android for approval. The long-awaited app for SHIB burn main app is also on its way. Stay tuned. This app will further increase SHIB's burn rate, which has already spiked considerably over the last few weeks. Interestingly, SHIB burn revealed that the more than 1.36 million SHIB were burnt in the last 24 hours. So they are really, really burning a lot of tokens here. Will all of these movements help SHIB ecosystem and affect its price action in the coming days? The interesting thing, in my personal opinion, is that we will catch the momentum of all these burns. And when it does, it is going to be parabolic for sure. In the past 24 hours, there have been a total of 136 million SHIB tokens burned and 11 transactions. Visit SHIB burn to view the overall total SHIB burn tokens, circulating supply, and more SHIB army. The SHIB burn effect, as of last week, SHIB gained 3%, which can be considered as a satisfactory gain. However, at this time of writing, the altcoin is down 6% in the last 7 days. At press time, SHIB was trading at quad 0.1175 with a market cap of $6 billion. A major reason for this decline could be that the after effects of the merge, which pushed several altcoins prices downward, but several other metrics were also to blame for SHIB's recent price decline. For instance, the market value realized value, MV/RV ratio, went down along with the daily active addresses. These can be taken as bearish signals suggesting further downtrend in the coming days. And their opinion says, Shiba at a crossroads. SHIB's daily chart revealed an ambiguous scenario as certain market indicators suggested a downtrend while others pointed out a possible trend reversal. The exponential moving average, EMA ribbon, suggested a bearish crossover, which further increases the chance of price decline soon. The moving average divergence, the MACD, also painted a similar picture as it showed a bearish edge in the market. However, the relative strength index, RSI, and Chaikin money flow, CMF, provided some relief as they moved slightly upward. All right, jumping over here to the Ethereum article, floppening. So Ethereum price weakens post-merge, risking 55% drop against Bitcoin. So that doesn't mean as a whole, but against Bitcoin. Bitcoin is starting to pick up its dominance over ETH again. A classic bearish reversal pattern suggests pain ahead for the ETH-BTC pair, despite Ethereum's milestone merge event. But again, as we were talking about, buy the hype, sell the news type of scenario that's going on, Ethereum's native token ETH has been forming an inverse cup and handle pattern since May of 2021 on the weekly charts, which hints at a potential decline against Bitcoin. And as you can see here, this would be the cup, and then this would be the handle, and this amount of space here from the bottom of the cup to the rim of the cup, that would be the considered measured move. An inverse cup and handle is a bearish reversal pattern accompanied by lower trading volume. It typically resolves around after the price breaks below the support level, followed by a fall toward the level at the length equal to the maximum height between the cup's peak and the support line. Applying the theoretical definition on ETH's BTC weekly chart, 0.03 BTC as its next downside target, around 55 from September 16th price. Can ETH-BTC pull a Dow Jones? Alternatively, the ETH-BTC pair could nevertheless deliver some large gains in the years to come. On the weekly log chart, ETH-BTC pair is painting a potential cup and handle since January of 2018. In other words, a rally towards 0.5 BTC in 2023 is on the table, up more than 520% from the current price level. So short-term pain for long-term gain. Unlike its inverse counterpart mentioned above, cup and handles are bullish reversal patterns with their upside targets located at levels equal or maximum to the height when measured from the breakout point. And here's a little look at the cup and handle, which could be coming in for the positive side of things. This one would be on the Dow Jones, so you can get an idea of what it looks like. And then this is the actual pattern playing out in real time on Ethereum, Bitcoin since 2018, the rounded bottom, boom, putting it all the way up here at 0.43 ETH or 0.43 Bitcoin per ETH. Flipping or flopping, Ethereum's potential to overtake Bitcoin by market cap has been commonly dubbed the flippening. Ethereum is competing with Bitcoin to become the so-called inflation hedge, according to Joshua Lim, head of derivatives at Genius Trading. Lim cited Ethereum's EIP 1559 update from August 2021 that introduced a fee-burning mechanism into its protocol. According to Ultrasound Money, ETH's supply growth now stands at minus 1.43 per year, so now it is a deflationary token. In other words, the token could be becoming disinflationary with time. Lim argues that it makes Ether an attractive alternative to Bitcoin among institutional investors. But many argue against the flippening, including Raul Singh, the founder of DeFi platform Fin Tokens. He told Cointelegraph Bitcoin would continue existing as digital gold while Ethereum becomes Internet 2.0 project.